All right, we'll come back to you, gentlemen. For now, let's talk about the earnings from the FMCG consumer space. Marico, Pidilite, United Breweries, Kalyan Jewellers, Nykaa. Abneesh Roy, Executive Director at Nuvama Institutional Equities, is now joining in. Abneesh, morning. Rima here. Let's begin with Marico. Very strong numbers. And what stood out for me is that even in their core business, say Parachute, we are seeing premiumization. So the company increasingly is launching these almond oils, etc. So in the, while Parachute volume growth is up 10%, value-added hair oils revenue growth was close to about 22%. Where do you stand on Marico, and is there comfort on the valuation front to buy today?
Sure. Hi, good morning. Thanks for having me. Yes, so generally we have seen results from FMCG companies being quite strong in Q1. That started in Q4. Yes, Marico, very strong numbers. Their EBITDA growth 25% was at a 7-year high. And we do see that near term broadly 20% plus EBITDA growth will continue. And overall India volume growth again double digit in Q1 was a good achievement. Although my sense is Parachute, that 10% volume growth should not be the new normal. But we see that even high single digit kind of volume growth in Parachute should continue. The rest of the portfolio like Saffola Foods, which grew 43%, etc. The premium personal care, the digital brands, all are doing well. Only thing which did not do well for Marico was Saffola edible oil, but that is not a high growth or focus segment. Coming to valuation, yes, the stock has done exceedingly well last 1 year, 3 years. So valuation comfort may not be high, but 4 stocks I want to highlight, which always looks expensive, but generally they are top tier. So Marico will be one of those. So apart from that, Pidilite, Nestle, Asian Paint, Radico, I think these 4-5 companies always look expensive, but generally they will continue to deliver top tier growth. So we are positive on Marico.
Positive on Marico, yeah, strong numbers in that sense. Abneesh, hi, morning. Do you have a view on Nykaa? Do you track it or have a view?
Yes, we have a view, we have a coverage, so we are positive on the company. So clearly, company has really surprised on the fashion business with a 68% kind of a strong growth in terms of the EBITDA overall, and in terms of fashion, 53% NSV growth. So company has been really delivering on the most of the guidance, and BPC continues to be very strong. The beauty part of the business, 29%. So I will say that fashion was the key surprise, and we have upgraded our numbers slightly. So we are positive, and we have a buy on the company, and we have a target price of 414. So we do see the company doing well. It is expensive, but we have to see SOTP valuation here, given some businesses are in growth segment, some businesses are in the mature phase. So just seeing P multiple again in Nykaa will look very expensive, but here we have a SOTP target price of 414. So we are positive on the company.
414. Abneesh, Nestle was a standout performer on the earnings front in the current quarter. But yesterday at the analyst meet, something that the management said spooked the street and the stock declined. What was your read of the analyst meet? And this is also one of those expensive stocks, trades at 60 times forward multiple. So what should investors do?
I think nothing to worry. I think these are healthy corrections which keep happening in expensive stocks. So yesterday in the presentation, one slide was there. I think that spooked some investors, wherein they are given the overall category growth rate. Frankly, in Q2, I would still expect Nestle to deliver 20% revenue growth on a reasonably good base of 10% in the last year same quarter. So 20% is not a bad number. From Q3, Nestle will become slightly more normalized growth in my view of around 10 to 12%. Again, not bad for such a large company. So yesterday in the analyst meet, they gave a lot of data points on increasing penetration opportunity, which is available in chocolates, in the prepared dish, even in terms of the pet food and all that. So I will say that Nestle, don't get spooked on that 3%, 4%. The stock has done well. So it was a healthy correction, but I think that's a buying opportunity. It remains one of the top tier growth companies even in Q2.
What's your highest conviction idea right now, Abneesh? And any absolute sell calls?
So we like the Alcobev space because Tamil Nadu clearly big reforms are likely. TASMAC is likely to get privatized, and it's a very big market. So we like all the 3 listed companies which we cover there, United Spirits, Radico and Allied Blenders. Valuation comfort is a bit more in United Spirits because there is a 10% dividend yield likely because of the IPL team sale. So that is one thing we wanted to highlight. In terms of sell, we don't have, but definitely one thing which I think cigarette stocks worst is behind, but even in Q2, there will be a decline in terms of volumes and profit. So ITC, I think, should be looked more from a 1 to 2 years perspective. But near term, we will not prefer cigarette stocks in spite of valuation comfort because of the severe taxation. So that is how in Sin stock will prefer alcobev companies rather than cigarette stocks.
All right. Yeah, I mean, maybe I don't make some sin joke, but I won't. Thank you very much, Abneesh. Appreciate you joining us. Useful conversation, and we'll track how all these stocks start up. Nykaa, actually, the pre-open is on, right? So we maybe